Hey guys, today's Tuesday. Was not planning on trading today, but was able to look at the opening with my phone today. Was trading on paper, so therefore I think it's okay that I traded. Just have to do some reps, and to watch the opening is definitely something I want to do every single day. So I'm glad I had the opportunity to do that. Still wasn't at home, but yeah, once again trading on paper. You can see the business right here. So quite a clean win. Was a 1.25 risk reward trade, ATM model short, market maker sell model. Right here, also on market maker on regular trading hours, a market maker sell model. I will show you in a second. But before we go into that, I want to break down today's conditions or the daily conditions. So just trading still inside the range. If you adjust for contract changes, as I did right here, you see that we took out the daily sales liquidity, so it could be that we are now aiming towards higher prices. Still, that's not really something we concern ourselves with. We are just looking for intraday levels. So what to me is important is still the bearish fair gap right there, just the quadrant levels, how we react there. The quadrant levels right here is today's no range gap. I will also show you. So back to a 50-minute chart, you can see that Asia really clearly trade higher after we took out yesterday's liquidity pool right here, which we were aiming for basically all day. Finally did it right there. But yeah, Asia trade higher, also London, then NYOKZ SSL consolidated, AM manipulated higher first, then manipulated lower, and then with basically 10 a.m. we were finally done and trade higher, followed the trend towards higher prices. So with that, let's take a look on regular trading hours, which is right here. So today we had a huge new open range gap, trending new open range gap, premium gap, so towards the upside. And what makes today's trade so special is the fact that we were able to take out the buy side liquidity right there and then already trade higher back towards our 0.25 level, so our upper quadrant level of today's open range gap. And that's what we want to see. We want to see that we at least trade back to that or CE, and from there on continue our trend with the gap, and in that case higher because it's a premium gap. So that's what we did. So back to our trade. Also now we will have a look at the opening. So once again, we took out every session buy side liquidity, so London also, and then New Open Kill Zone as well. And what I really like is basically the fact that we also trade right here into the bearish daily fair gap. We created also a 1-minute rejection block, but also a 5-minute rejection block. You can see right here, which we also traded into. That's important basically for stop loss placement. And then what we also did is we had this displacement through the high right there, followed by displacement to the downside. So that's a really clean balanced price range. If you would have also a short-term high in here, it would be a Susi market maker shift, I think. In that case, it's a really high quality trade, a bit a late entry, I have to admit. I was not marking out the balanced price range, obviously on my phone, not handy. So therefore I wasn't really completely aware of the balanced price range right here. I was more aware of the inversion fair gap, which I wanted to fail basically. And I was also aware of the wick that we trade into the balanced price range right here that I wanted to see. Not balanced price range, the rejection block that I want to see that we do not take out the high right there. That was for my stop basically really important. Entered right here and was aiming towards New Open Kill Zone size liquidity and obviously the upper quadrant level. Also did trade lower towards London lows, but in that case I think that's enough for me because then we really came back to our stop, and that would have stopped me already if I would have only taken one partial. In that case, if we clearly have high resistance conditions, I like to just close at the obvious low-hanging fruit, both contracts, and that's just more rewarding, I think, so for my approach. Back to the 5-minute chart, really important for stop loss placement. Why? Because we have this 5-minute rejection block, we trade into it, Therefore, I think we are done with that. I don't want to see that we trade back to it. And I want to see that we basically attack NYOKZ SSL liquidity. But that's just, in that case, a really clean trade, I think. Could have also entered a bit later, be a bit more patient, or already enter basically with the candle right here after we trade lower from that. Would have been a bit better risk to reward, but yeah, was just a bit late. So I think I covered everything actually. What I also think is quite interesting that we then had a really clean market maker buy model after we took out London liquidity, and now I want to take a look if we respected, or when we respected, the upper quarter level, kind of right here at 1020. So let's go back to that. Would be right here. So that's actually a possible trade I think you could take. Let's see if we also have S&T right there. That would be awesome. Where we are, 10. Yeah, we have S&T, so that's really clean. So we have S&T right here. That makes the trade a really high, not macro, a really high quality market maker buy model, because in that case that's our manipulation leg, and then we can even trade the inversion trail gap right there. So really clean. I think there's a volume imbalance, I'm not sure. So that would be something like that, and that could have been a really clean trade. Also like how we expected the high time frame C level right there. Something like that. Then we can aim towards even AM session highs, and in that case also probably the upper quarter level of today's bearish fair gap, but in that case I like it like that. So that could have been definitely a trade which we could take. But yeah, really content with the ATM model short right here. So regular trading hours, market maker stand, but also on electronic trading hours, also trade into a higher time frame PD array, swept every session liquidity, clear displacement towards the downside, clear target, clear stop loss placement. We actually sold definitely before the 10 macro, so way ahead. But I'm once again content with shorting before the 10 macro. Not buying, but shorting is most of the time okay before that. So yeah, that's basically it. Hope you enjoyed it. Hope you learned something new. And I guess see you soon.